Welcome back. Big tech is leading the sell-off today. Adding to that, pressure for Apple is Warren Buffett's Berkshire Hathaway, announcing over the weekend they sold nearly half their stake in Apple. It follows Berkshire selling of Bank of America shares for 12 straight days. We should note they're still the biggest shareholders in both companies. Let's bring in Bill Stone. He's a longtime Berkshire Hathaway shareholder and also chief investment officer at the Glenview Trust Company. And so many people, Bill, are wondering what to divine about this Apple. Correct me if I'm wrong. This was supposed to be one of their major tentpole kind of positions, kind of into the distant future. And just after a couple of years, they seem to have changed their mind. Why?
So I think it was mostly, I'll say, a risk management valuation decision. Really, it was quite shocking, partly because, he'd paired some of the holding in the first quarter, and we heard about that at the annual meeting. And he really talked in glowing terms about Apple, saying it was, a great company, better than almost all other companies. So you're right. It was a bit of a shock, but I kind of tag it to that Apple went up, I think about 23% in the second quarter. And it was mostly, at least in my view, based on expectations that AI and putting AI in the new phones would drive a stronger replacement cycle. So my suspicion is maybe he thought things were a little ahead of themselves, took the opportunity because he's got such a big stake. You really have to kind of sell into strength and not necessarily weakness.
Sure.
And I think it is worth noting he still owns a lot of Apple stock. So it's not like he dislikes it or he would have sold all of it.
We're showing that chart that shows this real sort of takeoff pattern from May through June. We know the position was exited sometime before the end of June. So perhaps he talked in glowing terms the share at the annual meeting and then decided, well, if it's going to rally like this, to your point, there's a lot to offload. But it's still, I guess I'll have to let the Apple folks decide what this means. But he's very good at sort of spotting moments when things are just not going to appreciate the way that we supposed. There's also a big cash position now. What do they do with it? I mean, or maybe being in treasuries was literally the best market trade of the past couple of years' time.
Well, and I think he said it. He did actually say it at the annual meeting that he wasn't finding a lot that he found attractive. And I do think it's of note. In my view, it's pretty clear that he wanted to de-risk the portfolio. I look at his cash level as a percentage of the total size of Berkshire, and it's as big as it's ever been since 1990, which is as far back as my data goes. So he's, one of the things, again, he said at the annual meeting was, you have to be ready to take advantage of big opportunities, and maybe he thinks he'll get a big opportunity coming up. So while he had a lot of cash, now he really has a lot of cash to be able to do it.
Yeah, although, again, 10% from the all-time highs doesn't sound like the time that they would pounce. But, of course, and we've seen plenty of single stock. Do you think he'd buy Intel? Let me not even go. But, there is an opportunity now to look through what might be something very attractively priced. What would you add, either from what you kind of want them as a shareholder to do or how you're looking at the markets today after this kind of difficult couple of weeks?
I think I would just say you got to keep it in perspective, right? Like at the end of the day, yes, he trimmed some of his stocks, but at the end of the day, he still owns, over $274 billion worth of equity. So it isn't exactly the call that it's the end of the world. And I think just like he's, I guarantee, doing, we should all be doing is looking through the carnage and looking for those opportunities, mindful of the fact that, maybe we will see a recession. I think that's unclear, but I think you're looking for high quality companies that can make it through. That's exactly what Buffett's doing right now, if I had to bet, and it's what we should do too.
We need the modern day Dairy Queen. It was at 1999 or whatever when everyone was buying .com. I think that's when he bought it. So I'm thinking about the deal today, maybe Mars and Kelly. It's impossible, but it's one of the fun guessing games anyway to try to figure out what he'll do. Bill, for now, thanks. We appreciate your time today.
Thank you.
Bill Stone with Glenview.